Leo, welcome back to the table. It seemed like everything was about this crazy boat stuck in the Suez Canal, and now it's gone, and we're all sad to see it go. It's sort of like the train engine or something. Everybody sort of fell in love with this boat, but oil markets are returning to business and focused on where is OPEC going to go next. Where do you think demand in Asia is at the moment?
I think demand is still good, is still going forward as in the last few weeks, the last few months. China is, even though they're not putting in many new orders, but the refineries are running. They're taking oil out of storage, and they're getting new oil, and not in the least from Iran at the moment, which they publicly announced to have a deal with. So it's I think the demand is still going strong. It's not slacking off. Very soon, China will come out of the refinery maintenance as well, so there will be a further increase there, and we'll see it keep going.
Rustin Edwards, head of fuel oil procurement at Euronav, sitting in Geneva. Rustin, what is the takeaway? A week with the canal closed now, every boats are moving. Is this a story over, or still disruptions to fall from this event?
Well, I think we're going to see it's going to take them about 5 to 6 days to clear up all the backlog of traffic and then get things moving on a kind of somewhat normal basis. Now that the Ever Giver is now anchored in the Great Bitter Lake, they can now get both north and southbound traffic moving again, or they've already started doing that. I think the problem that we're going to see here on the global logistics side is that you had some ships reroute around the canal, some ships that went and waited. So you're going to start seeing congestion at delivery ports when the ships that diverted and the ships that went through start arriving close to the same destinations, getting the boxes off, getting boxes on, getting ships out. So it's going to cause a bit of a headache for a lot of container companies here going in for the next couple of weeks, because it will take time to clean out their supply chains and get things moving more efficiently in the destinations of the vessels.
James McCallum, Executive Chairman of Xergy and Professor of Energy at Strathclyde University. Good morning, James. Welcome back to the table.
Morning, Sean.
We're seeing oil markets open down in Asia this morning, despite overnight both Russia and Saudi Arabia came out in support of holding current output levels at their meeting on Thursday. So essentially keeping supply restrained, but the market still wants to fall.
Yeah, look, I think what we're seeing at the present moment in time is that the window of price that the market is looking at is the $60 to $65 range, which, to be honest, I think is broadly correct. And I think the moves and the comments from Russia and from Saudi are consistent with that's where they're trying to find the point at which their actions need to retain that point. It has to be said that there has also been press coverage in the last couple of days around an increase in the last month in terms of exports from Iran, which are undoubtedly making its way to China, and certainly Ted on the chat room has already made that point. So I think, for me, we'll see the price nudging down towards 60, bumping up towards 65 as the announcements come out. But I think OPEC Plus continue to do a good job of doing whatever it's needed to kind of keep it within that window. The other thing I think which is relevant, I mean, you were commenting the other day around the sort of like the slow nudging up of the Baker Hughes rig count. For me, that remains very incremental in terms of where it's going. Almost certainly the bigger players there, taking the opportunity to work over a well or recomplete a well that was previously drilled and potentially bring it on stream at relatively short order economics. And I think that will continue in the United States, but I don't think we're going to see a wholesale return to activity amongst the smaller players in the United States there. I think OPEC Plus will do what it needs to do to stabilize things around 60 to 65. And as long as there's compliance amongst the people who are prepared to accept that kind of price point, they will control the market.
Leo, as James mentioned, you touched on it in your opening comment, China's appetite for importing Iranian oil now at about 1 million barrels a day. Of course, much of this crude is rebranded as if it's coming from somewhere else. How does that get digested sort of in official circles in terms of paperwork? And who loses out if they're Chinese barrels, or Chinese are taking Iranian barrels? Whose barrels are they not taking?
Well, typically the vessels are coming out of Iran turn off their transponders for a while, and then they show up again in either Oman or here in Malaysia, either reship it, reload it into other vessels, or simply change documentation one way or the other. None of it's legal, of course, but. And then move on to China, and typically it's the private the teapot refineries that are willing to take more risk on that and purchase that. But they're not taking.
They would never stop in Singapore. They would never pass through Singapore.
Well, they will pass through the Malacca Straits here, but
of course, but never stop or be offloaded or transported through. Singapore basically wouldn't be facilitating this trade.
No, that wouldn't happen. No, that has been done either typically in front of Oman or in somewhere around Malaysia, usually. And the barrels that are not coming are mainly from West Africa. That is what it's replacing.
From the likes of Nigeria and Angola?
Correct, yeah.
Those barrels then would need to find homes in Europe or the US?
Europe or the US. The US keeps buying regularly Nigerian crudes, and Europe will pick up more of that.
And of course, the Nigeria and Angola had lost out in America to a great extent in recent years due to the rise in shale, a similar grade. Perhaps now with shale down, there's an opportunity for Africa, or for Nigeria at least, to reclaim some of its market share in the US.
Yes, exactly.
Rustin, we're seeing in the US overnight some data on flights, travel, air travel in the US seems to be picking up rather robustly. We're now above 1.5 million barrels, 1.5 million passengers. They might all consume a barrel, but 1.5 million passengers a day traveling and the pre-COVID number was 2.4. American Airlines are saying in the story we have on the digest that they're at 90% of pre-COVID. That's bookings going forward. So all in all, aviation back in the U.S. market.
Well, I mean, the U.S. market is picking up, but it isn't, the U.S. aviation market is an island amongst itself. It's still all domestic travel, not a lot of international travel, because you still have to contend with the local rules when you land. But domestically inside the United States, travel's been picking up. The business travel's not as much, as people are still relying on technology to meet their constituents. But the tourist travel is doing okay at the moment. I think the warnings from the CDC that came out yesterday about the current fourth wave that looks like it's picking up in the United States, and they're trying to cajole people not to travel. The federal government hasn't done anything yet to curtail people getting on planes, but that is a lever that the Biden administration can pull if they think that the amount of COVID cases increasing, outpacing the rate of vaccinations would warrant it. So it's good to see. It's good to see the recovery coming in the United States. It's helping drive the refining margins in the U.S. higher. But there's always that cautionary flag that if things get out of hand, the government could step in and squeeze back on the travel, put restrictions on travel in general.
Do you have much knowledge of Rustin, of this vessel? We have a story on the digest today off the coast of Yemen, the FSO Safer, which has now been sitting off the coast of Yemen for 5 years. And has over 1 million barrels of crude oil on it. And many are getting concerned that the condition of the ship is uncertain and a potential disaster looming. It seems to have got caught up in the war, the politics there. Can you have any insights on that?
Well, the ship was installed as an FSO, basically as a way to offload crude from the Yemen field production. The vessel has had, there's estimates about 1.5 to 1 million barrels of crude on board from the time that it was actually an active production platform. And it has been a big concern for a lot of people in the maritime sector, the fact that the ship has a slight list. They think there might already be some damage to the hull and causing water ingress into parts of the ship. But nobody can get on board to investigate, and nobody can get on board to check. I mean, the problem that I think, if you think about how currents flow in that region of the world, if that ship should happen to start leaking, you could see a crude oil spill that flows into the Straits of Bab el-Mandeb, which then would start choking traffic coming out of the Red Sea, and basically have a major pollution incident throughout that whole region. So it is a bit of a concern, and a lot of people have, and the neither side in the Yemen conflict are allowing anybody on board to investigate. I mean, I know the UN has been trying to put pressure on to get some type of ship survey done to ascertain the status of the vessel. They even offered at one point a couple of months ago to bring in a lightering boat to offload the crude, just to make it in a much more safer condition. But it's all been for naught for now, and that's that. Hopefully nothing happens and it doesn't break apart and doesn't start leaking oil everywhere.
Well, hopefully not, but it's now 5 years and counting. One would think something needs to be done pretty soon. It's a high-risk poker game at this point. At any day of the week, that thing could rupture. James, meanwhile, back in oil field land, we're seeing Total agree to invest a few $1 billion in Iraq. Is this indicative, do you think, of the big international companies going back to spending, going back to developing new capacity? In this case, the Iraq's report is sweetening water so it can be used for re-injection and pressure in the oil fields of Iraq.
Yeah, it's certainly really encouraging to see, Sean. I'm not convinced they're going back to big spending, and certainly necessarily big spending into new activity. It's worth acknowledging that the fields that they're going into already exist, and the activity that they're investing in is enhancing production that already is identified. Clearly, I think what it is seeing a French national oil company investing strongly into this region, which I think is entirely consistent with the historical activities of Total. So it's good to see them back at the table. I think, if you take a look at the big majors' oil share prices, they're not really moving anywhere at the present moment in time, up a little, down a little, certainly, up from their lows, but again, probably even as much as, if you take a look at Equinor or sort of even almost Shell coming up towards doubling their share price from where their lows were, but still, often half of where they were prior to the pandemic. So it still continues to be uncertain times. Worth acknowledging that Total is one of the key champions of the energy divestment strategy also. So it's good to see that they are investing strongly and heavily into the renewable sector to broaden their portfolio, and they're still coming back to the table to invest in major infrastructure plays here in the Middle East. I think it's a good sign.
Leo, we're seeing the latest of tensions in the infamous South China Sea, as it's called, between the Chinese and the Philippines. There is an area in the Philippines territorial waters called the Whitsun Reef, where the Chinese fishing vessels, quote unquote, have been sitting, where about 200 rather large Chinese fishing vessels have been sitting and holding the Whitsun Reef for now a few months, which would give concerns that they might be planning to start loading up and reclaiming land there. And again, one of those new territories for offshore China. How does that look from your perspective, from an Asian perspective, that this issue in itself and this trend?
Well, it is very concerning. China claims about 90% of the South China Sea as its territorial waters, and there are counterclaims by Philippines, Indonesia, Malaysia, Brunei, Vietnam, that each claim part of that for themselves. The conflicts typically arise regularly between Philippines and China and Indonesia and China. In this case, it's the Philippines, where indeed there's about 200 very big fishing boats that are not doing much fishing. And they all lined up neatly, so-called sheltering for the wind. But I think people are very concerned what the intention is and what the result will be and what they can do against it, which is not much in the end. In the end of the day, unless there's help from the US or from, but then you can create a much bigger conflict than which probably not many people would want to see. But it is very concerning that.
I suppose the question is, where does all this lead? We had the most senior U.S. admiral last week claiming in front of Congress, perhaps it's slight hyperbole, but nonetheless, he's a sober enough guy, admiral, saying that the Chinese are lining up to take some posture, advance their posture vis-a-vis Taiwan. All of these territorial positions seem to be accumulating. Does that feel like an issue of concern from where you sit in Singapore, or from far away? Are we overreading the situation?
Well, there is not much attention being paid here to the Taiwan angle. It's all focuses on the country itself. Philippines today, Indonesia previously, and there's not much attention on the Taiwan angle. It could very well be that it's a posturing and getting ready, because some of the islands they start reclaiming and building airfields, airlines. They're putting in weaponry on those islands. So it is a positioning, and could very well be that Vietnam plays in the background of their minds there. Yes.
Rustin, Taiwan, of course. Yeah, Taiwan is the big one, and I think ultimately the biggest goal of China is it's always been Taiwan, and it will always be. Rustin, the dollar climbed to one-year high against the yen yesterday. The idea that treasury yields are continuing to grow, inflation lifting there, and with all of these extra costs we're seeing now in shipping, containers, day rates, etc., how does that, as one component of inflation, but ultimately rising costs in the movement of goods around the world?
Well, it's I've said this before. I mean, inflation is the specter in the room that everybody wants to acknowledge, but they also want to ignore. I mean, bond yield, 10% bond yields went up again, 1.73, I think yesterday is where they closed. They're up again this morning. But yes, all these costs of freight is going to translate into the cost of goods, which then translates into what we pay for that stuff, even if it's via Amazon or via the retail store. So it is going to hit the pocketbook. I mean, even rising oil prices will eventually hit the pocketbook and reduce the amount of disposable income that people have. So it is something that, as much as the U.S. could use the investment, another $3 trillion in stimulus, is that really something that the U.S. needs to think about at this time? Although, some of the projects they want to propose are good projects, because the U.S. infrastructure does need a revamp and a revitalization from where it currently sits. But it is, again, can it be afforded, and how's it going to be trickling on down to the consumer at the end of the day? So I think it's something that it's going to be hitting, and it hasn't already started to hit. It will hit pretty soon.
James, as OPEC lines up for its decision this week, it's got to think about demand recovery, obviously, but also supply recovery. We talked earlier about Iran up to 1 million barrels a day now, that wasn't previously in the mix. And also, as you mentioned earlier, although somewhat dismissively, that the US recovery is not really of scale yet. But there's been a number of reports in recent days and weeks that the US shale producers are positioning, they're securing their forward hedge, they're refinancing to lower their borrowing costs. It's like they're getting ready to pounce once this price is right. What are your thoughts on that, and how quickly could that happen?
Well, look, I think some of it can happen very quickly, but the reality is, I think it's a story of deep pockets, and certainly if you're able to refinance your debt position and your bond positions, you're going to go and do that. But for me, it's naturally migrating towards a bigger company play, with the Occidentals, if you like, the Chevrons of this world, the Shells of this world, who will take a position on whether or not that forms a part of their portfolio going forward or not. And I think ultimately it will. I don't think we'll get back to the 13 million barrels of oil a day. I think we'll stick around 9, 10, maybe punch up towards 11, but we'll have lost a couple of million barrels of oil a day out of that marketplace. I think that the bit around Iran that's significant, that million barrels, is not the million barrels so much, because as we know, there are almost 8 million barrels of stranded production amongst the OPEC plus members. So what is it? It's the fact that it's not, if you like, necessarily within the control of OPEC plus, and so that it's the uncertainty around that is the issue. The continuing story for me is very much watching how OPEC plus controls the price point to a level which is at a place where they're making enough of an economic return to, if you like, fuel their local economies, whilst at the same time giving enough back to some of the more disgruntled members who would like to see that price increase. In controlling it at the 60 to 65 and following the actions of the last couple of meetings, every now and again throwing a little bit of a curveball of uncertainty into your actions, they, if you like, curtail the financial markets in the United States coming into financing additional shale oil production. And that's where they really, I think, want it to be. The bit for me, as I look out over the next couple of months that I'm watching, is really this continued posturing between the United States and China, and the effect that it actually has here in terms of oil production in the Middle East regions, particularly around the Iran piece. There's nothing new, Sean, in the relationship which China has in Iran. They've been there for a very long time.
Well, it's becoming more, it's nothing new, but it's becoming certainly more profound. $25 billion and 25 years. And I mean, there's no signature on dotted lines yet, but this does look to be the case of my enemy's enemy is my friend.
Yeah, to a certain extent, but let's be frank, they've been doing somewhere around $18-20 billion of trade a year for the last few years into China. So nothing particularly new. They're just sort of like declaring, if you like, a future intent to carry on with that. But let's make no mistake, if Iran was back at the table and back in as an accepted member of the international community, they would want to be doing business with American companies, with European companies, in helping them to actually establish their position.
I think there lies the ultimate point as we go forward. If the rift with China becomes embedded, are you on the China side or are you on the West side? And if Iran had to make a choice today, I think it's pretty obvious which side of that choice they would go on, because it's the only bread line they have. So I think the context is changing. And I think the assumption that Iran will rush back into the JCPOA is, I think at this point now, looking somewhat a miscalculation. If China gives them an out in the other direction, they'll be reluctant or hesitant actors there. They're always hesitant at the negotiation table, always playing for the last dollar. But let's go to the survey question and get the view of the room as to where is all this demand recovery going to come. We had the IEA March report forecast demand recovery of 5.5 million barrels per day in 2021. That's sort of the figure, the OPEC saying something similar in their monthly reports. But do you think that will be achieved? Struggle, but yes, we'll get there. Not quite, maybe 4 million barrels per day of demand recovery, or lucky to get half of that. What's your view on where this infamous demand recovery comes as we see Manila back in lockdown, Europe's still deep in lockdown, although Americans are getting on airplanes. So where's the view in the room on where demand recovery is going? Leo, we started with you on that point that China has always been, and it's been a big anchor of the demand recovery in 2020, essentially saved the oil market. Not so much this year, or can we expect that in the second half of the year, China will get their big buying boots on again and help that realize that 5.5 million?
I think it will. I'm optimistic about the demand in China, and I think it will continue to be strong. And the economy is growing. I think probably much faster than what we can see now at the moment. It's not only in oil, of course. You see a very strong steel market, very high iron ore prices as a result of that. Very high, strong metals markets in China. So the recovery or the growth is back on track, and with that, oil demand will keep coming as well.
Rustin, if you had to make an argument to OPEC, they called you up on Wednesday evening and said, listen, Rustin, get down here to virtual Vienna and give us an argument as to why we should increase supply. What would that argument be? Where is the surprise? If we're expecting OPEC to keep up its tradition of surprise, one would have to say that that is an increase and not a rollover. Yep. What would be the argument for an increase? Or would you hang up and say wrong number? Sorry.
I mean, I would think that the actual surprise would be a cut. Or an extension, not just to May, but do like they did in, February, they did for 2 months, announced a 2-month rollover. I think that's more in the cards than anything else because the demand is still not there. I mean, if you look at forward refining margins, they are still very poor. I mean, distillate margins under $4 now in Europe. I mean, when distillate cracks are getting that weak, it shows that there's no underlying industrial demand to help push the refining production up to increase the demand for crude. And so to me, I think that's more in the cards than a production increase. And I can't see justifying a production increase unless you want to shift oil flow to push oil into the US market where recovery is picking up and the margins are very good, which they can do that through OSPs versus doing it through OPEC production. So to me, it would be either roll forward for another 2 months, change your OSP pattern to push oil into the US Gulf Coast to combat against crude there and keep a lid on domestic production because you're going to discount your deliveries into that marketplace and leave Europe alone.
Let's get the survey result before giving James the last word today. Struggle, but yes, to get to the 45%, not quite, maybe 4 million, lucky to get half of that. James, your thoughts on that result and to the point of where OPEC may still surprise. There's going to be more oil coming from OPEC because inevitably Iran seems to be adding barrels every week if nobody else will.
Yeah, okay, so reaction, I was one of the people who voted struggle, but yes. So why did I do that? I think we've got a relatively negative sentiment in April coming up here, but I think increasingly the arguments that are taking hold is it's the economy, my friend. It's the economy. And I think that will grow in terms of its sentiment, particularly across Europe as we enter the summer holiday season. And I think reluctantly we will see some of the European countries open up their borders and greater travel will kick in. So I think we're going to see positivity in that particular space. I think in terms of the increased production, if you were looking for that curveball for me, Sean, what would justify that is to send a message to the world that OPEC Plus is entirely in the driving seat and will do whatever it suits its purpose to do. And if you like, take the wind right out of the sails of any sort of nascent resurgence in the shale oil market. And equally send a message to China that, yes, you bought additional Iranian crude when the prices were up at $70 and because it was cheaper on the market. But in actual fact, look at what we've done. We can take the price to wherever we actually want it to be. That would be the reason. I'm not convinced they will do that, but that would be the reason that they would do it. But last point on that, whilst I said earlier on that clearly Iran is looking to the east, and you made that point very, very affirmatively there, Sean. Let's be frank, the whole of the Middle East in the last decade has turned and looked east. So when you take a look at the production out of Abu Dhabi, out of Saudi, a lot of that is looking to the east. And I guess one of the big curve questions that we will all need to watch going forward is what does India do as its economy continues to grow? Where does it seek to develop its relationships in terms of fueling its economy going forward? And there's no doubt in my mind that it will be the Middle East here that is looking to cement those kind of relationships, but at a price point that makes it work for India. And that is actually not where it is right now.
Yeah, perhaps India becomes the next destination for those sanction-busting Iranian barrels. China seems to have that unique opportunity to be able to dance both with Saudi Arabia and the Gulf Arab countries and Iran and have no political fallout from that. But India is not allowed to do that. America can't. So there's this sort of paradigm, hard to see in the immediate term that being resolved in any way, but India could play a part in the next month or two, chasing some of those cheap oil barrels that the Iranians are making available. Why should they all go to China? Okay, well, that's a wrap. Thank you so much, Leo. Thank you, Rustin. Thank you, James. Our halftime talk interview this week is with the president of the ICE Futures Exchange, which has just opened in Abu Dhabi, with Murban trading for the second day there, a new entrant to the market, and we'll see if it attracts the volumes and liquidity that it will need to anchor in as a benchmark for east of Suez. All the best. Have a good week. We'll catch up in the coming days. Thank you.
Thank you, Sean, gentlemen.